Hi there and welcome to Business Day right here on ET Now. I'm Avan Dabash. A quick look as to how the markets panned out this Friday. Well, it was fairly disappointing on account of negativity across the globe, plus the rupee breaching 55 against the US dollar. Volume activity was fairly high and the market breadth was absolutely abysmal. So it was below 58.54 and 47, that's down 1%, and the Sensex off by 211 points at 19,242. You had it showing you the biggest percentage loss since October 8th for the Nifty. Well, we keep you up to speed with all of the top stories after the headlines. Indian markets slip in line with the Asian peers as the US House of Representatives puts off a vote on the legislation to avoid a fiscal cliff. The Sensex ends with a loss of more than 200 points and the Nifty loses 1.2%, the worst among the Asian peers. Dalal Street's Big Bull says the markets will continue to remain volatile in the new year. In an exclusive interview to ET Now, he says the rally will, however, continue driven by global liquidity and strong earnings growth. The CBI files its second charge sheet in the 2G scam case, accusing Bharti Airtel and Vodafone as well as Idea of criminal conspiracy to corner excess spectrum. The charge sheet makes no mention of any company officials, although former Telecom Secretary Shyamal Ghosh has been named. After multi-brand retail, the government now plans to give FDI power to real estate developers. Sources tell ET Now that while the minimum foreign investment norm is likely to be relaxed, there will be some concessions on the lock-ins as well. Indian automakers hope the worst may be over for the industry as the year 2012 draws to a close. But experts say that a turnaround is unlikely anytime soon. Well, we're certainly under pressure for the entire day, and for the week gone by too, it hasn't been a great one. So you had the biggest percentage loss since October 8th on the Nifty, and as far as the Asian peers were concerned, we were the worst comparatively. For the broader markets too, they fell in tandem with the way the broader markets cracked. So you had the Smith-Yav Index, which shaved off a good 1.5% and 109 points knocked off for the small cap index. Big index losers, well, it was a sectoral move. All of your sectoral indices came thrashing down. It was led by rate sensitives like metals, real estate, capital goods followed suit, and healthcare, which managed to hold up, didn't even end like that, and it was down and out by the day's close. Some of the big index losers included the likes of Ajay Prakash Associates, GSPL also in the limelight on the downside. You had an IDFC as well as DLF, which cracked in the session. Some stocks in focus today, not many to really highlight, but you had a Punj Lloyd which fell flat on its face as reports indicate that its Sambhagagan unit has halted. So it really saw big ramifications on the back of that. Open soft and by the end of the day saw accelerated selling pressure off by 6%. Amtech Auto, though, that saw some good movement as the company will be buying stake in Autoline Industries, and that's only according to market rumors. It was high by close to 9.5% in today's session, and in the last 5 days also has gained very impressively close to 8%, touching its 52-week high just on the 17th of this month. Volume activity also fairly supportive. So, for the index gainers, well, you only had TCS, which featured on that list. So from the gaining list, it was the only IT major, 1,258 on last tick. Otherwise, most of your Nifty 50 counters were deep in the red. So how did the week go by? Well, it was fairly disappointing, led by the selling pressure today particularly. You had the Nifty, which was down by close to 0.5%. The Sensex there giving it company. The mid-cap index comparatively not so badly off, very flat you'd have to say, and the small-cap index shaved off just about 0.5%. Let's highlight how some of the gainers have panned out for this week, and metals, they really took the cake this time around on account of the way the global prices have been panning out. Brokerages have been giving the sector a big thumbs up. Tata Steel put on a good 8%, Hindalco for the week gone by put on 7%, JSPL2 featured on the list, and from defensives, it was Cipla which had a fairly good run. On the downside, though, you had a combination of high beta, cement, as well as oil and gas names which featured on the list. So look at the way Jayaprakash Associates crumbled. You had a Cairn India, which was off by close to 4%. Today it was one of the biggest losers. Ambuja Cements, as well as Siemens, too, were down and out. In terms of sectoral movers, you had the oil and gas index, which shaved up 1.3%. Real estate took quite a knock, and the bank Nifty was down by close to 0.9%. On the gaining side, though, you had the auto index, which shone, so that was higher by close to 1%, and the CNX IT index put on just about 0.5%. So fairly dismal day, below 55.50, in fact, on the index by the day's close. But let's go across then to Navneet Saluja to find out how the F&O activity panned out. Navneet, below 58.54 today, what did the F&O activity look like? Were the volumes high?
Yeah, Avan, if you look at the volumes, they were quite high. The turnover on NSE was about 1.83 lakh crores. So the profit booking was with a good amount of participation also. If you look at the closing for the Nifty December futures, they just closed at the 58.50 mark at 51, which is about 4 points premium to the spot Nifty, and they shed about 9 lakh shares in today's trading session. If you look at the options data, the Nifty PCR, that fell sharply to 1.02 compared to yesterday's closing of about 1.08, clearly indicating there was aggressive call writing in today's trading session. Have a look at strikes like 5800, that added a significant 10 lakh shares. You had 5900 call strike adding 19 lakh shares in today's trading session. On the put side, well, you saw a lot of unwinding in open interest. The strikes like 5900 and 6000 shed open interest in the range of about 15 to 20 lakhs in today's trading session. And on the stock futures front, very few gainers were there except for ITC. You had on the losing side JP Associates, which fell in today's trading session, short positions being built up there. The high beta metal counters saw profit booking in today's trading session. JSPL, Sesa, Goa, Hindalco, all these counters were down in today's trading session. And you also had Punch Lloyd, Adani Power and IFCI from the mid-cap space where short positions were being built up, and coupled with IVRCL, Infra and Syntex, they were two down today. And from the mid-cap space, you had only Havells, which did well, so there were long positions being built up there. Well, crucial week coming ahead. You'll have the December contracts expiring next week.
Thanks very much, Navneet, for giving us all of those details. So high volume activity ahead of expiry plus a holiday next week. Well, is this kind of a trend likely to continue? In an exclusive chat with our stocks editor Nikunj Dalmia, Rakesh Jhunjhunwala says that a bull rally cannot be expected in the short run. He's bullish on individual stocks like Titan Industries as well as Lupin, and in terms of sectoral preference, it's retail as well as the agriculture sectors which he's betting on. Let's hear out a slice of that conversation.
Markets are anticipating that now the interest rate cycle has turned. We are going to have a lot of interest rate cuts next year. Despite all the pessimism the market is going through, is performing extremely well with very good breadth and all technical indicators being extremely positive. I don't know how good earnings growth will be. If earnings growth turns out to be good, then surely we could be at the beginning of a good market.
What do you make of the verdict of the Gujarat election?
As expected.
Is there some case now that the Indian electorate is more voting towards development?
Well, one thing is very interesting in Gujarat, that he has won 80% of the seats in the urban areas and lost 80% of the seats in the rural areas. I think this has big implications for the 2014 election.
Some experts are of the view that consumer stocks are the leaders of this new bull market. Some experts feel that consumer stocks are priced to perfection.
All of them are good quality stocks, good governance, good cash flows, reasonable growth. So I personally think there could be some correction in their P's, but surely they are going to give a return which is equivalent to their earnings growth.
What could be the trigger for a Titan? It's a mature business now. It's got a market cap of $6-7 billion.
Well, I don't know. What will trigger negativeness? I mean, if you have 18 to 20% growth, I'm very happy. And I think seeing India's the size of the economy and the kind of areas the various companies are, and I think that kind of growth is eminently possible.
Even in Lupin, which is a mature business now?
It's not that mature businesses don't grow. I think Lupin is going to grow greater than 18%.
Do you think Titan could be the next Nifty 50 stock?
Well, I don't know, but I think it certainly deserves to be.
You're also bullish on Agri because you've invested in Rallis.
Yeah, but I think there is no question, but we have to raise agriculture productivity. Food demand is going up year on year. Land is not available. Further urbanization leads to even lesser availability of land. And fruit it's a challenge. Only way you can do it is through technology.
Over the years, you've been bullish on one group, which is the old generation private bank. You've got two investments there, Federal Bank and Karur Vyasya Bank. Yeah. What makes that space so exciting? Because you've never invested large money in any of the PSU banks for that matter.
See, banking is about trust, and I don't trust the government. Right? Second thing is, you see the expense ratio to income ratio of the public sector banks never comes down. It is a very important ratio. So there is no benefit of scale.
Okay, that's the word coming in from the Big Bull and his top sectoral as well as stock recommendations. Let's take it straight to the telecom space, and the CBI today filed its third charge sheet in the 2G spectrum scam case. The 50-page charge sheet names Bharti Airtel and Vodafone for hoarding excess spectrum. But in a respite of sorts, no company officials have been named. Let's get in Suchetna Ray, who's been tracking this story. Suchetna, run us through what the charges are, against whom, and what are the implications for the same.
Perhaps the only relief in all this has been the fact that while Bharti Airtel and Vodafone India have been named, no officials from these companies have been named in the charge sheet. This is, you have to remember, is a big departure by CBI in this 2G scam. For the first time in a charge sheet, telcos have been named but no officials. They've been charged with criminal conspiracy and criminal misconduct, both Bharti Airtel and Vodafone, as well as former DOT Secretary Shamal Ghosh. The maximum punishment if these companies or Shamal Ghosh is found guilty is 7 years imprisonment. Now, if a company is named, what it means is that the board of these companies will decide who will represent these companies in court going forward. Also, in the process of hearing, the court can also summon any of the executives of these companies. We have to remember that CBI has pegged the loss to the exchequer because of this excess spectrum allocation between 2001 to 2003 at over 840 crore rupees. The DOT minister at that time was Pramod Mahajan. He has been named, but obviously since he is dead, no charges against him have been framed. Another key person who was involved in this was J.R. Gupta, an official in the Department of Telecommunication at that time, but he has turned a witness and therefore no action has been recommended against him as well.
I do find it a little ridiculous that Vodafone has been implicated, particularly as Vodafone was not even there in India when this issue is said to have, occurred. I am a little surprised that Vodafone has been named. The fact that no officer has been named also shows that, even their investigation into the past, they have not come across any officer's misdoings. Why they are pleading? Is it because there's pressure on them to implicate big companies or what? I really don't know.
Thanks very much, Suchetna, for coming by and giving us those details on the charge sheet, the third charge sheet, in fact, filed in the 2G spectrum scam. The real estate space, and the Commerce and Industry Minister is going to meet the industry today to talk and discuss some of the issues for Ailing India Inc. The meeting, of course, comes at a time when the government has already cleared several long-pending and crucial reforms like FDI in retail, the Banking Amendment Bill and the Companies Bill. The meeting will be attended by industry stalwarts like Adi Godrej, Naina Lal Kidwai, A.M. Nayak, Sunil Munjal, as well as Harshpati Singhania. Let's take it straight then to Devduta Das to get us more details on the same. Devduta, what are the exclusive details in terms of the kind of reforms that the Industry Ministry is looking at, and how soon can we expect a decision on it?
Well, the meeting that Anand Sharma is chairing is to gauge the kind of issues that India Inc. is facing, but then the DIPP is already working on a set of reforms for the realty sector. Now, they want certain relaxations to be made in the FDI norms so that there is more FDI that comes into the low-cost housing sector. Now, what they essentially are looking at is easing up of the lock-in period from the current 3 years to about 18 months. Also, the easing up of the investment cap that is there right now for wholly owned subsidiaries, it's at $10 million, and for joint ventures, it's at $5 million. So, certain relaxations there. Also, even though the sector is open to 100%, but it's via the FIPB approval route. So, this ministry is also seeking that it be made through the 100% automatic FDI route. These are the kind of proposals that the DIPP has drawn up, and it has sent for an approval or to seek views to the Finance Ministry and the Ministry of Urban Development. It will be the third or the fourth big ticket reform that the DIPP has so far started or is on its way to do after the FDI in retail and aviation reforms that have just taken place.
Thanks very much, Devdatta, for giving us all of those details. So perhaps FDI in real estate is likely soon. Now, moving away from that, and in a move that will give a fillip to low-cost housing projects, the Reserve Bank of India has opened up the ECB route for developers and housing finance companies to tap funds overseas. But in a scenario where builders are staying away from such low-margin projects, the prices have shot up much ahead of demand, and this directive really bridges the gap in affordable housing. Let's get in Ritu Singh, who finds out.
Giving a big thrust to low-cost housing, the Reserve Bank of India has allowed property developers to raise money overseas through the ECB route. In a sector that is plagued by liquidity concerns, this move not only provides another window to access capital, but reduces the cost of borrowing at a time when domestic interest rates are ruling high.
There is a need of liquidity in the market. There is a need of affordable housing. We welcome it. We are more than happy to receive this fund.
I think the ECB is going to be very good for the real estate. This is a need of the market also. It looks like developer will certainly be coming forward and introducing more of a project in the affordable housing segment.
When it comes to the affordable housing segment, builders require higher working capital as the realization kicks in only after the completion of projects. This means that their interest outgo is much higher, and this is where the ECB window comes in handy. But there are other issues as well.
Unfortunately, rupee is still volatile, and therefore not that once government has announced funds will start flowing. ECB will be very good in a situation where you have very good visibility on rupee.
Affordable housing may not be a grant money spinner for realty companies, but in metros like Mumbai, where nearly 60% of the population lives in slums, this has got a tremendous potential. And if taken in the right spirit, the RBI directive has the potential to change the skyline of several Indian cities for the better. Ritu Singh, ET Now, Mumbai.
Now time for our special year-ender series, Year to the Ground. Now it could well be a year that automakers would rather prefer to forget about. Labour unrest, slowing sales as well as muted growth forecasts. The road signs have never been so bad in recent times. Kartika Trehan takes us through the toughs and the roughs of the auto industry.
The year 2012 began with a bang for automakers, only to fizzle out in the end with car sales posting the steepest fall in nearly 12 years. High interest rates and fuel prices slapped the brakes on demand, while rising raw material costs ate into their margins. And to make matters worse, prolonged labour dispute at India's largest car manufacturer Maruti Suzuki shook the industry, throwing growth projection out of gear.
Manufacturing sector slowed down, the capital goods sector slowed down, and these are all sectors whose growth actually drives the car industry. So the result has been that all these forecasts of 15% growth or double-digit growth have vanished.
Car sales rose by a healthy 26% in January, but started moderating soon after. The Society of Indian Automobile Manufacturers lowered its growth forecast thrice in the year. From the initial estimate of 11 to 13%, growth projection were lowered to 6 to 8%. Finally, the industry body admitting that it will be a no-growth year.
There are no positive sentiments at the marketplace, and hence actually the industry is going through a tough time.
Slowing sales apart, it was an eventful year for the auto industry, which saw some big-profile churns at the top. Former General Motors India CEO Carl Slim, who took charge as the CEO of Tata Motors. While Volkswagen got a new managing director in Arvind Saxena, a Hyundai Motor veteran. But it will be the absence of Ratan Tata, who steps down as Tata Motors boss later this month, that the auto industry will take time to grapple with. On the positive side, Motown saw the launch of some exciting cars. M&M's XUV continued to break new grounds and giving it company with the Renault Duster, Mahindra Quanto and Maruti Ertiga. Among small cars, Maruti created a flutter with the launch of new Alto, even as the Merc, BMW and Audi slugged it out for the top honors in the luxury car market. The two-wheeler industry also saw a slew of launches, including the new Bajaj Pulsar 200 NS and the Igniter from Hero Moto, even as Honda continued to make strong inroads.
As we drive into the new year, things are not looking any bright either. Dieselization is the new mantra, with even true blue petrol car makers like Honda are shifting gears. But with market leader Maruti raising the red flag, one thing is sure, that it is not going to be a very happy new year for auto companies. Kartika Trihan, ET Now, Mumbai.
Well, that brings us to an end of this edition of Business Day. Thanks so much for watching. Keep it with ET Now.